Are the bears trapped? Because we now have 5 weekly hollow candles in a row, which means an expansion. And I think these bears are starting to sweat some bullets. This is probably not a very nice feeling. Let me explain the reasons why now. First of all, these 5 hollow candles in a row, by definition, means there's an expansion underway. We now also have a weekly higher high, which means the bulls have made progress. And the S&P has that same 5 hollow candles in a row, but we've not yet formed that weekly higher high. So if that happens, oh my goodness, we might hit escape velocity. The S&P has now had its second strongest close ever. But here's what I want you to pay attention to. We'll come back to this in a second here because I do want to explain why I think these bears are sweating bullets. We're on the doorstep of going back into extreme greed, which basically means the bears flip it over. They're almost into extreme fear, right? They're probably pretty scared right now. Stocks are basically at all-time highs. So what's really driving the market today? Well, it's the big guys. It's mega cap, right? Nvidia, right? Flexing 4%. Oh my goodness, right? That's probably, if it's a $3 trillion company, that's $120 billion added for 3.26 trillion again. Wow. So the Mag 7 rally as Nvidia's winnings hit 14%. Markets wrap. So Treasury sell-off eases as Fed's bets stabilize on cuts, Fed stabilizes cuts. So we're looking for 2 cuts going into November 7th. That's right here at 86.7%. What's also really interesting is that Nvidia actually broke out. So when we look here, oh my goodness, look at this. If it's still the leader, well, it's leading by example. As we showed you here, it's up 14%, right? It's a pretty big run. So why does this matter? Well, because we stopped going down. That's the downtrend. If we stop going down, there's a new pattern. I'm not sure what it is yet, but as of right now, looks pretty good. Why? We got 4 hollow candles in a row. Over here, we got like 10. Over here, we got like 10. Those are expansions. That's those hollow candles I just showed you at the beginning of the video. So why does all this really matter? Because the bears are trapped. Now let's explain the reasons why, because we're going to talk about another market, which this guy's from. All right, so we talked about that, talked about this. China markets warn G more stimulus is needed to fuel the rally. What does that mean? Not enough sugar, right? They're like, no, so we need more. So this is what I mean by the bears probably feel a little bit trapped. If we look here to China, like today, it's down by 9%, but it went on a rocket ship before it went higher. So if you were bearish, you're like, wow, this really stings. Okay. Oh, woof. Oh, this is really painful. Yep. And this move back down is nice for them, but it's clearly not enough. There was a lot of short selling here, which really drove the move higher. And what's really important for us as people who look at, again, the American market for the most part, even though I don't live in the beautiful America, here's the important thing. With this headline, again, news versus reaction to news. The reaction to the news, in my opinion, should be red. Now the question is going to be how red. Market's reaction shows mismatch between investors and officials. Yeah. Why? Well, because when in doubt, don't trust these guys. That's why. Here's the important part. Let's look at a big key pivot. That's why it's pink. This corresponds with 33.1. Where are we right now? 33.4. Okay, so we have a higher high, a higher low. We've bounced off the 50 weekly moving average. Yes. And this is what's really important for risk appetite, because even over in big, beautiful America, we're still vulnerable to what happens there. Why? It's a global market. So if we close the week above here and we hold the higher low, I would assume the market's going to find some stability and push back up higher. What I don't know is what's going to happen if China actually goes lower, because I just showed you, even with a 9% decline, I was expecting to wake up to red today. And I'm sure the bears were too. So they wake up and they're like, oh yes, gap ups are for selling. And they're like, wait, what? Gap ups aren't for selling. They're for buying. Uh-oh, this is getting increasingly painful. And for the bulls, they're just chewing out the clock. All we got to do is remain above 565 and they win. Why? As of right now, the recipe's pretty bullish. We got another higher low. We're resetting the bullish candles, but they're all hollow. The angle of ascent, or the amount of gains we're getting per week, is declining, but that doesn't really matter. It's just a big old flag. I look here to the weekly chart. They're hollow candles, so that's good enough. Just looks like a big flag, right? Pop, flag, pop, flag, pop, flag. Well, that's what it looks like to me. And the really important part is that now we got data we're going to back up to show you why it could be a bear trap. But first, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. So I'll leave you a video at the end, which will go through this in more detail, but tomorrow is going to be Wednesday. We got a 10-year auction. This really matters. Then we also have the Fed minutes. That's at 1 o'clock and 2 o'clock. Pay attention to that, because going into Thursday morning at 8:30, this number, in my opinion, if it comes out as expected here, I think it should be bullish. But here's the caveat, because last week, if you would have shown me the numbers, I would have said mixed result. I did not feel confident with the numbers we got last week. That was the jobs number. Inflation's still really important. We're almost a 2, 2.3, 0.2, 0.1. And then PPI on Friday should cinch the deal. So what does that mean? What am I really telling you? We're very close to resistance. We're bullish, but we have not yet confirmed a break. Why? We don't have a higher high. 574.1, 574.3, 573.7. $1 lower high versus our previous all-time high and 2 weekly lower lows. So if the bulls are going to march higher, well, we should get a weekly higher high. And if we can hold it into the close of the week with the data I just showed you, that's bullish. We're going to go put 222 and then 5 hollow candles, bullish on the daily chart. Well, that means we're probably going to be at new all-time highs. Why? On a weekly candle close over here, that's what it would mean. It means new record high, new record close. And it doesn't even take volume to get there, right? The bears are paying for the rally, right? I'm sure they're sweating bullets, and I'm sure they're going to come out loud and proud in the comment section today. All right. So that also explains the reason why energy would be down. There's some growth concerns out of China. All right. So the market's been due for a correction, but hey, this market is not normal. It was due for a correction last month too. We're currently, yes, I have mild dyslexia, and I terribly apologize for that sometimes when I make errors. So the market usually drops 10% every 172 days. Right now we're at 288. The market is due. It's overdue, right? It's due for a drop. That's what we know. And the $8 trillion rally is going to be with a tricky earnings season. With what? Banks that kick off earnings on Friday. What are banks going to tell us? Right now, the whisper numbers are all bull or beat, but the bar's been lowered. Is that going to be enough? Are they going to raise guidance? Are they going to lower guidance? That's really important. Remember, on average, Fed cuts are actually bullish, despite what you might have heard from bears. This is what they focus on. Well, negative 30, 48, 30 after the Fed's first pivot. Yes, that's in a bear market. They're also removing all of the other moves. After we're already down 20, it's pretty easy to go down 27. That's right. All right, so what do we do, Justin? Because you're saying a lot of stuff, but I'm still a little bit confused. I'm basically saying you need to have patience because right now the stakes are very high. In order for us to break the chart, and I've said this before too, so when we're here, I'm like, oh my God, right? I'm clenching my butt. I'm grabbing my ankles because if we don't hold here when we were at 565.2, I'm like, oh, damn, this is it. We came in for the soft landing and then pushed off. Here's what I want you to think of. I'm going to click out of here now and going to our strategy. This is what I wanted to see. I wanted to see it on the weekly chart, but I don't always get what I want. We went up, we came back down, we curled and bounced. Oh, it just happened on the daily chart, not on the weekly. Okay, so make sure you understand what your dominant time frame is because based on the math, we're still looking for higher, right? 577, maybe even more. All right, well, both sides actually have a pretty good opportunity right now, in my opinion. The bulls have a pretty good case, and the bears have a pretty good case. So instead of going through all the rest of the notes, I'm going to leave you with a video right now. Click on that on the left if you want to see that. If not, I will see you at 9:15 a.m. tomorrow. Thanks so much.